Lotus Ventures Inc. is a BC-based medical marijuana company poised to launch into the rapidly evolving cannabis sector. Lotus is in the final review stage of the Health Canada approvals to become a licensed producer, having arranged facility financing of up to $12 million, plus building permits for its prototype indoor production facility. Shares trade under the symbol J on the Canadian Securities Exchange. Visit our website at lotusventures.ca.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for institutionaladvisors.com. Welcome back to the show, Bob, and happy weekend.
Yeah, hey, Jim. We got a lovely day here today, and all the best to you.
The price of oil below $50 for the first time in quite some time, I guess. What's happening with oil?
Well, as you know, to go back to the crash, it began in 2014 when oil was 107, and then it crashed all the way down to 26 in January, February of 2016, which was exceptional. You know, very oversold, and it came back up. So a couple of months ago it hit 55, somewhat overbought. At the time we thought, well, maybe one more jump would finish the move, but it didn't get that. It finished, sold off, and then the latest rally was looking for up to 53. I think it got to 53.75, something like that. And then now it's rolling over. There's a lot of crude oil around, and it was fascinating to watch the OPEC guys, plus Russia, hang on with their bureaucratic notion that if they slow down their production, the price will go up, and then they'll make more money. But if you're selling less of the product at a higher price, you're not making any more money. And besides that, we're in a post-bubble contraction sort of thing, whereby most commodities will be weak for most of the time. So what that does is force, like, for example, in the 1930s they said about the grain farmers is that they were getting weaker prices, so every year they planted more, and it was called planting from fence post to fence post. And this is what's happening with crude oil now because of the new player in the game, which is fracking. And, gosh, they're getting down to something like a producing price at $20, some at $15. And so the OPEC people are still in a bureaucratic world, detached from reality, and they think that their old recipes will work, and they're about to get their ass handed to them again here. So crude oil prices down, perhaps late in the year they could be down to that, $30 anyways. That's just a guess. And because the North American production, particularly in the U.S. from these tight sands, is just phenomenal. It's a technological revolution, and it's not new in resource production to have technological revolutions. In 1910 is when the miners figured out how to mine large, low-grade copper deposits. That was with the Bingham Canyon just south of Salt Lake City, Utah. And I was down there skiing at Alta in the late 60s. Just go down regularly, ski the powder at Alta. And then we took a day off and drove over and looked at this big hole in the ground. And it was huge then. And Bingham Canyon's still going, with the hole in the ground being even bigger. And then in the 70s, the gold mining people figured out how to mine large, disseminated, low-grade gold deposits. And here now, this is the equivalent with the fracking of shale sand deposits, and it's there, and it's not going to go away. And anybody that's dealing in the old world is going to get damaged very severely. So welcome lower crude oil prices. which eventually, believe it or not, feed into lower gasoline prices. So,
well, of course, we never see them in Vancouver.
No. And then we were looking for a rally out of last fall in base metals and in crude oil up until somewhere around March, and they've made them. So now the base metal prices are slightly weaker. Even the grains did a short, sharp rally and are weakening. And this is actually in the last 4 or 5 weeks where there has been little net change in the U.S. dollar index. It's trading around 99, and I think it's building a base. And historically, like in 2015, it builds the base over a couple of months against the 20-week exponential moving average. And so it goes maybe 1 week above, maybe 1 week below, and then eventually it sorts itself out, and you start the rally. So now it has to get above this 20-week EMA, which would be constructive, and then the next step would be to break above the last high at the 102 level, and then it could really move. It would be quite a rally, which then will make commodity prices even weaker in U.S. dollar terms. So it'll be exciting, I think. Then the other one in here is that with that commodity, with the weaker, well, let's put it this way, they've stopped going up. And one of the things that happened in the crude oil crash was that a whole lot of junk bonds related to the petroleum business got crashed as well. And then it took down other junk bond issues that were not related to the oil business. So down into January, February 2016, it was a disaster in credit spreads and yields for junk bonds. So then, of course, that washed itself out, and you've had a fabulous recovery there with rising low-grade bond prices, falling yields, and way outperforming treasuries. So the spreads narrowed in until about a few weeks ago. And on one of the series, we've got a pretty big technical reversal on it. And so the credit spreads have had a lot of joy for more than a year, and now they're beginning to reverse the other way. And the other thing we kind of note is that often in a year, credit spreads can be narrow into around April or May, and then there's a seasonal reversal. So what you want to look at is, has it been party time in the spread market? Yes, it has. Are we going into the time when you can get a seasonal reversal? Yes, we are. So spreads are reversing a little.
We'll be talking about gold and silver when we come back with more from Bob Hoye.
I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario. With grab samples running as high as 32 grams per ton gold, a drill program will commence this spring to test the numerous targets located by recent groundwork. For more information, visit our website, rmroyalty.com.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're chatting with Bob Hoye. Bob, gold and silver. Gold is still kind of buzzing around $12.84. Silver, $17-18. Shouldn't it be higher?
Yeah, the silver bugs think, of course, that silver is always undervalued, and because they sit down and do the supply-demand numbers, and every year you get, or they can prove that every year there's more silver consumed than is mined, and therefore it should go up way higher. And whenever a silver bug's forecast doesn't work out, they never look at their methods. They immediately say there's a conspiracy out there and governments are depressing silver prices. And I don't think so, but what you have here now is that the ratio between gold and silver has been the pricing series with the longest history. They got it going way back to Babylonian times. But at any rate, when you have the history of the gold-silver ratio and the history of really what's going on in the financial markets, the gold-silver ratio goes down in a financial party. And it has. It came down here to about 67 a little while ago. And in the last month has been rising. And looked at it last week and thought if it can get above this 72 level, that would be the breakout on the chart. And I think, just let me take a look here. Yeah, it's up to 72. So it's breaking out because the last high was 71.9. So this then is saying that the financial markets are going to have a setback. So let's let it, really break out, let it get right through 72, and then there's no doubt that it has broken out. And then it would be suggesting that there would be the beginning of financial distress. And this also is working with the actual credit spreads, which are beginning to widen. So let's put it this way. The gold-silver ratio, I call it the metallic credit spread, is widening. And the actual credit spread, the difference between, say, high-yield bonds and long-dated treasuries, they're starting to widen. And so once through into May, this could be really turned, in which case you can often have seasonal distress in the credit markets going into later in the year. And I'd also worthwhile pointing out, Jim, that when it comes to the credit spreads, which is the difference between high-quality bonds and low-quality bonds, and then you have the yield curve, which is the difference between long maturities and shorter-dated maturities, when the credit market's in party mode, where they have been, and ready to change, the central bank, either the Bank of Canada or the Federal Reserve System, have never been able to resist that change. They can influence short rates for a little while, and then, of course, with buying so many long bonds, they influence long rates for a while. But when it comes to these very powerful market forces which show up in the spreads and in the curve, when it's time for change, it'll change. And that's what's ahead of us over the next, 5-6 weeks, I would say. So it's interesting that action in gold and silver is confirming what's going on in the spread market.
We'll have more with Bob Hoye, including some listener questions.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're talking with Bob Hoye. Bob, one of our listeners, Henry Solomon in El Paso, has a couple of questions. First question, Bob, do you consider U.S. junk bonds to be a downtrend?
Yeah, as of the last couple of weeks. Prior to that, no, it was party time in junk bond land, and the price is rolling over, and this could head to considerably distressed or dislocated junk bond market by late in the year.
Do you expect the U.S. dollar index to resume as an uptrend?
Yep, we're looking for that one. It's got to stay above the 20-week exponential moving average, and it's been trading either side of it. And then for the real breakout, it has to get above 102, and we're watching for that, and we'll signal our readers when that little piece of news comes along.
Bob, the Canadian dollar now around 74 cents. It's lost a cent over the past little while. Is that trend going to continue?
It's going to head down, mainly because of, unfortunately, the Canadian dollar has been described as a commodity currency, and commodities are going to be weaker. Plus, we've got a very intrusive federal government there, and they think it's wonderful to go into debt and spend other people's money and depreciate the currency and all of this sort of stuff. And as it gets weaker, they'll say, oh, well, it's good for the tourists. Now, why should a government be catering to non-Canadians, tourists? The best thing that can happen for any country is to have a sound currency. It avoids speculation based upon depreciation, that sort of stuff, and somehow the interventionist economists have still got control of things at the Bank of Canada, and currency depreciation will still be a policy of this government. The Canadian dollar can go back down to the last low a few years ago of 68. It's pathetic, but it'll likely happen.
Bob, would it be a good idea for Canada to adopt the U.S. dollar?
Yeah, this can be done. It's a huge border with a lot of trade, and whether you're big or small business, if you're exporting and importing, you've still got to hedge that currency, which is a whole lot of additional cost. Whereas if you have the currency, the Canadian, pegged at par with the U.S., then you take that speculative side out of it, and it can happen. All they do is set up a currency board, and its job is to keep the Canadian pegged at par to the U.S., and then you wouldn't need a central bank. It'd be an ideal world, as a matter of fact, and actually very practical. So who knows, but it won't happen with this federal government.
Bob, have a great weekend.
You too, Jim, and enjoyed our interview here today.
My guest has been market historian Bob Hoye. He's the chief investment strategist for institutionaladvisors.com. You're listening to HoweStreet.com radio. You can hear your questions answered if you send them in to us to info@HoweStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of Howe Street Media Incorporated.